Hey gang, Anthony Fontana here, alive after 5, almost winding down a hell of a day. Busy, just seriously nonstop since early this morning. It's cool when it's this busy for me. At the same time, there is a point where I just want to like shut off and just veg out. We have a 140-mile trip tomorrow morning to a wedding, so we're going to be heading out of here. I'll probably do a live from there tomorrow. Hey, see what's going on, my man. And by the way, I called you the other day, but your phone went right to voicemail. I haven't had a chance to dial you back. I'll try to reach you over the weekend. Let's see if we can put some kind of business together with each other. So the mortgage market has been very interesting. It's always been interesting. What's happening right now is there's a lot of changing going on, and I did a very fast thing in the car on the way to do some shopping today, and I wanted to go back over that a little bit. So this live is really, there's not a lot of teaching going on in this one. I'm not going to be doing any of that. This is simply, I guess you want to call it a commercial for what I do, but I think it's important. I get a lot of FHA business. A lot of my market is Federal Housing Administration, federally insured loans, and VA loans. I'm working on a VA loan right now. Most of my deals are FHA. I prefer doing FHA, quite frankly. So here's what's happening. The FHA on the refi side now, and it's important because a lot of people pull cash out of their houses when there's a lot of equity in there, and there is a lot of equity in a lot of houses right now. They pull cash out to do other things, pay down debt, pay off a student loan, help themselves fiscally and improve their cash flow, maybe do a home improvement, etc. Well, the FHA has just announced today a rule change dropping the FHA cash out maximum of 85% loan to value back to 80%, which is in line with all the other programs that we have out there. Now, this is not a VA, this is FHA. So what's happening is, let's say, for example, you have a $400,000 home, and there's enough equity in there to pull out some cash. Before, you could finance 85% of that, or approximately $340,000. So if you had a $240,000 loan, you could pull out $100,000 and possibly even lower your rate. Depends on your situation. What happens now is we're going to be dropping to 80%. So the maximum loan would be $360,000, and if you have, a $300,000 mortgage balance, you're taking out $60,000. So that 5% kind of means a lot in the scheme of things. It might be the difference between successfully getting a deal done and not. So I want to give you a heads up. If you're in the market to do a refinance, you're just not sure, you have no idea, feel free to give me a call. I don't care what state you're in. I can have a conversation with you, but understand the process. It's going to be less money for you. Period. If you're looking to do a 203K home improvement loan, no difference. That program is still at 96.5% loan to value. We have 97% conventional loans that are available right now too. But on the cash out side, we're limited to 80% across the board. So I just want to give you all a heads up because it's going to be important if you're in business and you need money and you're looking to tap into your house, you might not be able to do that on September 1st. So I would say there's a convergence going on right now. Rates are higher than they were a while ago, but they're still at historic lows. Yesterday the market was insane. I mean, today the 10-year bond rate, it was unbelievable how it plunged down. So I don't know where rates are going to go. More likely than not, they'll stabilize over the next few weeks. So rates are pretty low. So if you're at 5%, 5.5%, 6%, maybe you want to refinance that. If you have a lot of credit card debt, which the interest on there is not tax deductible, you might be able to take some of that money that's in your equity and pay off that credit card debt. And you can literally make the same payments toward the mortgage that you were on the credit card debt and wipe out the credit card debt in 1/3 of the time that you would normally do. It's certainly way less than on a normal mortgage. I've done a lot of business that way and helped a lot of people out. I had one guy pay off enough credit cards to knock $1,500 a month off his credit card bill. That disappeared. His mortgage payment, I don't know, it might have gone up a few $100. So the net for him was over $1,200 savings. So he took advantage of an FHA cash out loan. So this is ending in 28 more days. The FHA case numbers must be assigned prior to the rollout. So if you're looking to do an application, it's time to step up right now. If you're looking to buy a house right now, look, prices have gone up. I think they're stabilizing, but my realtor friends can correct me on this. I think prices are heated. There's a limited inventory. A lot of buyers trying to get in the door, but the schools are opening up in another 3 or 4 weeks, right? So you might want to check with your realtor and figure out what your market is like. Like I have Jill Castle. Well, Jill, you're in Texas right now. I don't know your market really. I do some business down there, but not a lot. But your market is got to be busier than the New York market, in my opinion. I've seen some of the houses that you guys sell down there. Monica's real estate company. I saw some houses that would be $1 million in my town for $350,000 down there. So everything is relative, But how is your market down there? If you're in real estate, are you guys getting deals? Is there inventory? I'm going to open houses and buyers are showing up and no one's buying. And yet people are putting cash down. They're buying cash, paying with cash. It's a different world right now than it was just a few years ago. So understand the market is changing. If you're looking to buy a house, it's time to step up right now. I don't think there's a better time to do it. I think rates are fantastic. The products are fantastic. I have products. Hi, Laura. How are you? I have products that literally have bank statement loans. We have no doc loans. We have no ratio loans. Different types of products that are non-QM, and we have our regular standard things like everybody has. But there's a product for everybody out there. Unless you're so poor with your finances and you shouldn't be buying a house. I think a lot of people should. I bought my first house when I was only 20 years old. I was just a kid. That was 40 years ago. And I was told I shouldn't be buying it. I did buy it. I got to be honest with you. It's the greatest thing I've ever done in my entire life. Was it a struggle for a while? Yeah, absolutely. But when I look back on it, especially the first 20 years after that, that's where I created the most wealth, the most of everything in my life. It gave me the basis for everything that I have right now, and the future is just fantastic. So if you're looking to buy and you're brand new, grab a hold of a realtor, get a hold of a great mortgage guy, and get yourself pre-qualified and get on the phone with a real estate agent with that pre-qualification and go out there and buy a gosh darn house. I don't care how old you are, 20, 25, 30, or 50, or 60, go do it. The tax advantages are extraordinary. I've often done tax returns for people that came to me to buy, weren't sure, and I was able to show them that if they bought the house on the first day of the year, of whatever year that happened to be, and did their tax return based on buying a house that they qualify for, I saw people with savings of anywhere between $4,000 to $8,000 a year in their tax bills, and a lot of that can be put in your paychecks. So you can actually afford to buy a house. And the struggle, you're paying rent. You're giving your money to some landlord. I don't pay rent. I've never paid rent. And I don't think anyone should pay rent unless that's what you want to do. If you don't want to have ownership, if you want the flexibility of not worrying about repairs, and you move around a lot, that's fantastic. That's great. We need tenants. Landlords need tenants, no doubt about that. But if you think about it, if you want to create a long-term income, a long-term asset that you can pass down to your family, or at the very least retire in and not have to worry about getting thrown out, it's a fantastic way to do it. And by the way, you can do a reverse mortgage when you're old enough, if you have a lot of equity, and actually be paid to stay in the house that you're in, and you own the house until the day you pass. So a lot of great things out there, guys. Hey, Lorraine, how are you, sweetheart? We're working on yours right now, as you know. Leon, what's going on, brother? Laura's in here. Let me say hi to a couple of people. Jill, Carrie. So, hey, if you're looking to buy, reach out to me. If you need an agent in the New York market, let me know. I got a ton of great ones out here. If you need financing, God, for Pete's sake, I've been doing this since I'm 17 years old. That's a long time to be in finance and banking. So reach out, hit me up, ask the questions, and let's get going, man. And we will absolutely rock and roll. This is going to be your year. Who knows? By the end of 2020, you might be a homeowner. By the end of 2019, you could be a homeowner. Why not? Take advantage of the laws right now. Love you guys. Have a catch you later. Bye-bye.